what we're looking at here is the M3 ribbon. I'm going to go through installing it and configuring it as we progress and try to make this as succinct as possible. So I want to give you an introduction to what this thing does. Basically, it calculates a series of MAs, whichever ones you choose, any type from simple to triangular. For example, you could use adaptive, Hull, weighted, exponential. Did I say triangular? Well, whatever. So you can use a series of moving averages, calculate an interpolated range a number of different ways, and then project those things onto price. Now, there's two ways to project them onto price. You can do it the traditional way, which would be that you see the MAs plotted on price with no concept of how to handle a gap. So you get basically the peculiarities of handling, choosing to calculate something on missing data, which is basically like throwing a dart. Or you can use the gapless mode, which has several different methods of calculation and allows you to only operate on existing data and then calculate a more coherent data series. What we're looking at right now is the gapless version of this indicator, which is a significant enhancement to a standard MA crossover, because you get to see a lot of things like where we get volatility contraction, where it starts to expand, and how committed we are to the trend by how wide these moving averages, especially the fast ones, are from the next fastest, from the next fastest, from the next fastest. So what we see here is a day. We have a nice big sell-off into the into the end of this day. We clearly see that we're in a downtrend since all the moving averages the green moving averages are stacked pretty neatly underneath the downward sloping red moving average, the red moving averages. And then here we come into a little consolidation, volatility contraction, where everything gets very close together and they start expanding, where they're all stacked in the proper order. And you can see, the moving averages, listing here, which they're all pretty much, in order and coherent. And coherence indicates a trending market. Incoherence indicates a chopping market. So here we have trending, 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 and here we have essentially consolidation or chop. When you get these kinds of crossovers that are disorganized and incoherent, then that is usually indicating chop, and this indicator is very useful for that. Now, to show you how this looks relative to the gapless, relative to the standard way that these things would be plotted and calculated, this is the standard method. So this is what most people are looking at on their screen, and what happens is that they're only looking at a MA crossover, which is not really giving them as much information about volatility or volatility contractions or expansions or chop. But what they are getting is that they see, okay, well, I do have a little bit of a sell signal coming in here. It's not really sure about it, but let's say they took that sell signal. They get a buy signal right at the top, and then of course they get a sell signal right at the bottom, on the bottom bar. Now, this is very difficult to read, and the volatility expansion doesn't give you, any sort of divergence, which would be essentially that we're looking for a new low or test of the low where this fast moving average is not as far away from, where the spread between the moving averages essentially is less. Now, if we go back to our gapless calculated method, what we start to see over here is we see a very clear trend. We see that trend continuing across the gap. We see divergence in the terms of distance from the fast-moving averages to the slower-moving averages right here, and we see a retest of the lows. Over here, we see chop. When I go back to this thing, I don't know what I'm seeing really here because it's very disorganized, and I guess we could call this chop. But one of the nice things about this indicator is that when combined with the gapless mode, you can see a lot, and then you can also be relatively sure when you're getting into chop because you do get these disorganized kind of crossovers. And I'll point out a few other areas where that has happened. But most of the time when you get volatility contractions like we have here, what ends up happening is that we're dealing with something that is going to actually have a volatility expansion following the contraction. Now, you don't know which direction it's going to go in, and that's why we have indicators like this. But in this particular case, again, this is a movement over a gap. We were in the middle of a sell signal, which was still consolidating because not all the averages were neatly stacked on top of each other. This was still a consolidation. And here is where we get a nice breakout. This is a nice breakout where all the moving averages all of a sudden stack neatly. So that's the difference between this signal and this signal. So over here we have kind of not super chaotic, but we do have chop because things are crossing over. And the best indications of chop are where things are really just, disorganized. I just saw one here. Yeah, this is chop. So here we have like the fast moving averages and the medium moving averages all crossing over each other repeatedly, and that is chop. And what you look for is a breakout, usually volatility contraction, and then a breakout. So let's now go look further. This is going to our market currently. So let's go to our next view, which is where you want to see no gaps. So here what I've done is I projected the gaps across, projected the indicator into a subpane, and it shows pretty much, perfect, smooth trend, which is easily readable and gives you reliable, abilities to make consistent longer-term evaluations of the market trend. What I also did here is I plotted a special method to display price, and this is called the M3 gapless price. You can use this in a lot of different ways. You can use it to chart, you can use it to draw trend lines. It's much more effective, I think, to draw trend lines on a gapless chart than it is to draw them on a regular chart. And I have an indicator that I like to use called the bar trend, but it's embedded in here as well, so you can use the bar trend to actually display a series of red candles while we're in a red candle downtrend, and then green candles when we're oscillating up. Now, so this is a much more easily understandable way to project this indicator out. Next, I want to show you another implementation where we're looking at the VIX, for example, versus the ES. So essentially what I've done here is I've plotted the VIX. This is a gapless price of the VIX, and you can see how coherent it is. So you see a clear downtrend in VIX. It's not very difficult to see. There's no chop. There's no stress in trying to read anything that's going on, which is a lot different than if I was to try to view this without gapless. And I'm going to show you then, we can view this very simply in a way that's easier even to look at by inverting the price so it's complementary to the ES. So what we're going to see now is both of these prices inverted, so they're actually the opposite. And so what you see is when VIX essentially inverted goes up, you want to go long. Here you see VIX coming down to retest this ribbon, and it comes back up. And that's one of the other things that I wanted to talk about, which is that essentially one of the other things that you want to do, and one of the reasons that you want to project price onto, you want to be able to project prices onto this ribbon, is that it gives you supports. So you can go in here and say I'm going to start at a 10 moving average and give myself 12 montage of moving averages, and then you will get pretty nice support and resistance. You can make it less, you can make it more, it's whatever you want. So there you have it. That's the M3 ribbon. It is an overview. We got a lot more details if you purchase the thing, and in the documentation. I'll be back soon with another indicator.